Connections. I'm your host, Pastor Kevin McGee of the Victory Temple Church of God in Christ. You're listening to us on IntellectualRadio.com. You can also listen to us on iHeartRadio. Connections is a show designed to keep you connected and network to those in the Christian community who are making impacts. So get ready because your connection is now established. And if you wish to become a Connections advertiser, please reach out to me at bishop1915@gmail.com, or you can inbox me on Facebook. And if you want to host your own show here on IntellectualRadio.com, inbox me and I can help to direct you. And I want to say welcome to our new sponsors, two new sponsors to Connections, Elite Transit Assistance, ETA, better known. We believe that luxury is the standard for all. Our transportation services are excellent for weddings, birthdays, bar mitzvahs, graduations, bachelor's and bachelorette parties, funerals. Among our vehicles are limousines, luxury SUVs, town cars, party buses, charter buses. We also offer airport pickups, drop-offs, and transportation by the hours. To obtain our services, please contact Elite Transit Assistant at 312-880-7630. That's 312-880-7630, Elite Transit Assistance. And Taste and See Eatery, otherwise known as TAS Eatery, is a fine dining cafe and culinary sanctuary offering American cuisine with a Jamaican Caribbean flair. TAS Eatery is located at 3435 North Harlem Avenue in the Chicago Dunning area. The restaurant offers catering and features live entertainment monthly in their signature back room. Where you are guaranteed to have a fantastic time. The signature room can also be rented for your next special occasion or event. So come and taste and see for yourself. And if that's not enough, simply stop by and leave your prayer request on the restaurant's prayer board, whose owner and chef, Pastor Tanya Stewart, prays over daily and offers ministry to those who desire. TAS Eatery will also be starting a weekly faith-based discussion group. More details coming soon. You can check them out at TAS Eatery on their website at www.taseatery.com, on Google and Yelp. Call them at 872-946-7081 or follow them on Facebook and Instagram. And then finally, if you need any real estate transactions, contact me with GRD Realty, and I can assist you in buying, selling your home, or maybe even you want to purchase investment properties. Contact me today. And today we're going to talk about real estate, and we're on the air today. So you want to buy a house. Everybody's got their income tax refund checks, and now they're calling me up saying, Kevin, I need to buy a house. What do I need to do? And so I wanted to do a new segment called So You Want to Buy a House. And we have brought in this young lady who has been working in the mortgage industry for a long time. She and I have worked together, and thank God for her. She goes by the name of Kimberly Goldsby. She's a missionary and she's a lot of stuff, y'all. But she had her banking experiences are A+. And so thank you, Kim, for coming into the studio this morning.
Thank you for having me.
Oh, no problem. So everybody wants to buy a house. All right. Whether they have the money or not, they want to buy a house. But we're going to let you know that it's not really all about having all the money. You got to do a lot of other things before you get to the money part.
For sure.
All right. So I believe that with our expertise combined together, we can answer some of the questions that have come across my computer screen over the past 3 weeks. And this will be a great lead in or segue to a home buying seminar that will be hosted by Victory Temple in the very near future. First of all, let me say, all those that are logging in on Facebook Live, God bless you. I see you. V. Rogers Tyson's. She says, Mother Kimberly Hagler Goldsby. She threw out your whole thing.
Mother.
Okay. All right. Annette Harris, host of Mind, Body, and Soul. She says, welcome back, Elder McGee. Yeah, it's been a while. I've been away. Amen. But I haven't been on vacation. Listen, those of you that want to call in, and maybe if you have some questions you want to call in, you can call in at 708-223-8953. That's 708-223-8953. If you have any questions that you want to ask that are not being asked in the studio today, feel free to call in 708-223-8953. Make sure that you like and share today's broadcast. All right. So you want to buy a house. First of all, before we get to that, tell us a little bit, because, V has already put your church name out there. tell us a little bit about who Kimberly is. Give us a little background about you, about
Well,
yourself.
I started in the mortgage industry hmm, about 1990-ish. Been in it I've done it since my career, actually. I've been in all facets of the mortgage industry except appraisals. I've not gotten into that, nor do I want to. But yes, I have got it. I started out with doing credit and collections. And then I just kind of moved on and I started with conventional loans. I then went into FHA and VA, of course. And now I'm doing it all and commercial lending for your churches that want to buy property.
Yeah, all you pastors, you're tired of a storefront. She can help you to get maybe into a real building. All right. And then you are, since they put your church stuff out there, you are assistant state supervisor of third jurisdiction of
I
Illinois,
am, yes.
district missionary of the CD Owens here in Hagler
Yes, I
District.
am that too.
You are a wife, a mother, a
Y-
grandmother.
Yes,
And so, you got a lot on
a
your
lot of
table,
hats.
a lot of hats, a lot of hats. Shout out to your dad, Pastor Harley Hagler of the True Vine Church
Yes,
of God in Christ.
yes.
Amen. But we just thank God for you, and and just your family, your granddaughters who I rely on heavily in my role. But thank you for again being here. Uh, so you gave us a little bit about your
Mm-hmm.
mortgage industry. And I know you worked at a number of banks. Can you go down
Mm-hmm.
a list of some of the banks you worked at?
Oh, I've worked at Guaranteed Rate. I've worked with Avenue Bank and Trust. That's actually where I first started. I've worked with Marquette Bank. Oh my God, I've worked with a lot of brokers. I've worked with, well, it's not Designer now, but Designer Financial. I've worked with several. I can't even remember all. But the first place I worked for was called Express Funding. That's way back. That's when all of the mortgage companies were there. They're pretty much now kind of dwindled out. But yes, and even now I'm working really for a broker, and it's actually okay. I didn't really want to go back to the brokerage, but I'm finding out that I can help people more in the broker industry.
All right. And the reason why I wanted to bring you on, because like I said, I have all these questions, but see, you have the experience, and not only as a loan officer, you had past experience as an underwriter. Now,
Yes.
anybody that knows they're trying to buy a house, the underwriter is the person you got to get past. If you don't get past that underwriter, you're not going to get the house.
So
So
true.
she is a former underwriter. So she can tell you what you really need to have.
Yes.
She could tell give you, and she could tell you also. Let me tell you something. I'm just gonna put it out there because a friend of mine, he got caught up. She can tell you. She can tell you she's been with legit brokers. Can I say it like that? Because there are some brokers out there that are scam artists that will ghost you when things not won't
For
go
sure.
right, and we
For
just had
sure.
an experience with that. I've worked with her with some of my real estate transactions, and I can vouch for her work. All right. God bless you, First Lady Rich Clark. Uh, what exactly? Let's get right into it. The first question that
Okay.
came because somebody called me up and said, "Kevin, I want to buy a house. What's the first thing I need to do?" I said, "Well, first of all, I need you to go. I need you to talk to a lender or somebody because you need a
To
pre-qualification."
get
And his question
pre-qualified.
is, "What is a pre-qualification?"
So when we look at a pre-qualification, it actually says that it pre-qualifies you to buy a home. So we look at everything. We look at your credit. Now, we need a 600 credit score. It would be nice if it's over that. There are avenues to do it under 600. There are avenues to do it at 580. Um, but I'd rather not do those because it's a lot of work. But the 600s are good. We're able to do FHA. Um, I ask that the credit scores, look at your credit scores. Normally they'll tell me, oh, my credit score is over 600. I'll ask, how do you know? They'll say, well, I have Credit Karma. That's Credit Karma, and I'm not downing Credit Karma at all, but it's on a different algorithm. It's not the same algorithm that they use to qualify mortgages. So, if you have any judgments or, you know, um, any late pays, start paying them now. I have a situation right now where he's at 598. So we're just gonna do a little tweaking, but in 3 or 4 months he should be ready. Within that, start getting your monies together. If you have monies that is coming from the IRS, great, great, great. The only proof that I need is to see it in the bank, okay? And then I need to see that it came from the IRS. A lot of people have mattress money where they've been saving the money and then they want to put it all in the bank at the same time. We can't do that because you have to be able to source where that money came from.
Came from my mattress.
No, no, we can't do it from the mattress. We can't do it from the mattress. I actually have another clientele of another persuasion, if I can say that. That's what they do. They put their money under their mattress, literally.
They don't trust banks. That's what it is.
They don't. But, they do hair. They do hair.
Okay.
And so, when they go to file their taxes, they want to say that they only made $25,000 a year.
Mm-hmm.
And we can't do that. You gotta, you can, but if you want a property that's $200,000, truly that $25,000, because we're going to divide that by 12. And whatever that amount of money is, has to be able to cover the principal and interest, taxes and insurance. And if it's a condo, the homeowners association. It's not enough money. So, but they have 20% to put down. I could do it with no income at all. If there's 20% down.
20%. Okay. All right. So, and the reason why I said it because there are some ethnicities, old ethnicities where they don't trust banks, and so they keep their money in a home safe, under a mattress in a coffee pot somewhere. And when they get ready to purchase, they just take cash.
All of us. Some of us.
Yeah. They take cash to the car dealership. Now, I don't know if they can bring all that. Well, they might be able to be in a position to bring $200,000 cash, to cash money to the closing table. But then that's going to, send some red flags up.
For sure.
Because,
For sure.
How did you get this money? And it's a shame that you got to prove how you made your own money,
Shame.
Because if I don't want to put my money in the bank, but then I got to, but then you tell me I got to put it in the bank if I want to get a mortgage. Okay, I got to put it in. I'm putting the money in. Well, where the money come from? I worked for it. Well, how can you prove that you worked for it? Because I got it.
So, and that's a good question because, it's not really a question, but let me even elaborate on this. So I've had customers to say, well, I have X, Y, and Z. One customer said that they had $10,000. So I told them that then we have to have a process. How much he get paid, I think it was like $1,500 every 2 weeks. So we were able to go ahead and put about $750 in, just kind of under the radar. You just don't want to be able to put $2,000 in and it's more than what you make in 2 weeks. So, you just have to do it. You have to do it gradually, or, we can always say that it's a gift.
Okay.
Sometimes we have to prove, where the gift came from, but there are ways to get around that as well.
Okay. Now you mentioned a 600 credit score, at least a 580. And I do remember my times of working for a mortgage lender because I worked for a non-conforming mortgage lender. And those for the folk that just really had the bad credit, but they were able to get a house, but the interest rate was like sky high through the roof. Do we still find non-conforming lenders out there that would do those deals?
There are some non-conforming lenders. The rates are high, but the loan to value. In other words, you have to put more money down.
Right.
So whereas FHA, you could put the minimum is 3.5% down. Conventional is 5%. And then there's some other like Home Ready, you could put 3% down. But when you're doing, those that have some troubled credit, yeah, you're looking at a 20%.
Okay. Now I had a question that came across this morning, so
Okay.
I wasn't able to give you that one. But the question is that, home first time homeowners
Mm-hmm.
program.
Mm-hmm.
Okay. This person was a first time homeowner like 20 years ago. All right. He hasn't owned a home, and he sold it like,
Mm-hmm.
18 years ago.
Mm-hmm.
He only had it for a couple of years.
Mm-hmm.
He said he heard that after a certain period of time, he can be considered as a first time home owner
True.
again.
So
And
true.
how does that work? You know,
Well, to be quite honest with you, it's actually 5 years, I believe. Uh, as long as we don't see any evidence that you have owned a home in 5 years, you can be qualified as a first time home buyer.
really?
Mm-hmm.
Okay. All right.
Mm-hmm.
So all of you who sold a house 10 years ago
Mm-hmm.
and you want to purchase another house, you can come in and qualify as a first time home buyer.
Mm-hmm.
Kind of as an oxymoron. Okay. All right. Uh, what are some of the different mortgage loan programs that your company offer?
So we offer the FHA loans. We also offer the VA if you ever been a veteran or if you're a veteran, even if you are a widow of a veteran, we're able to do that as well. I did my first one and I didn't realize that you could do that, but you're able to. So if the husband or if the wife that served, if they're gone on or passed on, we are able to use their DD 214. We're able to use that for you to get a property. Hmm.
Awesome. Okay.
Yeah, we do conventional. As I mentioned, we are also in commercial lending as well. I'm spending more time in that a little bit more because that's actually where the money is.
Yeah.
But the commercial lending, we're helping a lot of people. They just have property just sitting with no mortgages. They paid cash for it way back in the day when properties were $25,000, $30,000. Can't find that much now, but we're able to basically what we call a fix and flip
Hmm.
or a fix and keep. So we're able to give them the monies that they're able to fix the property up. So we have to get a scope of the work that needs to be done. And once we get the scope of work, and that's usually done by a general contractor, not necessarily licensed either. You can be the general contractor. But the thing is, with that, you have to be experienced. So we're going to be looking for your experience, whether or not you have 4 or 5 different other properties. That makes you experienced. Of course, if you've done flips before, that makes you experienced as well. So people are buying those properties, they're fixing them up. And when they fix it up, sometimes they want to keep them. We'll do single family, we'll do multi units, we'll do um, um, mixed use properties. We've actually started on even a gas station. So the sky's the limit with the commercial.
And I was going to ask you about the gas station. It looked like that's where the money is because they got all the money. They just got some money out of me yesterday
Gas
at the
keep going
gas
up.
station. So listen, that's one thing. If you ever notice, we as a people, we don't look into the gas stations.
No.
Earl, you want to open up a gas station? You said we don't think about it because if you look at how many cars. What got me was when Willie Wilson, when he gave free gas, and I was in line and I got the free gas. I said, think about all the cars that's coming through.
Mhm.
Because Earl was up there pumping gas when he saw me up there. I'm like, this is something. And when you go in, what do you see as the proprietors of the gas station? You see everybody other than us.
Mhm.
I'm like, now I have a buddy who moved to St. Louis, and he and his brother went into gas station and made a lot of money.
Yes.
But other than that, we don't see
Mm-mm.
people that look like us
No.
operating and owning the gas stations.
No.
So I need to find I need to find a gas station, and then I need to come to your company and fix it up because
Yeah.
right there on Roosevelt Road, right next to the slice factory they just put up there, that right next to Burger King, that gas station is closed down. The property is there. The tanks are already down there.
Mhm.
So I'm trying to help somebody. So let's go to Kim's company, get the money, fix it up. and then keep it and make some money off of it, and then give me a finder's fee.
Uh, okay, finder's fee. So, and let me even put it in another, um, just so let's say, for instance, you did decide to do that. You decide to go and buy that gas station. I would that you would have someone else that has been in that industry some sort of way to be on perhaps your LLC or their LLC or their corporation in order to make it fit. Because they'll say, well, how do you know about owning anything? How do you know about running anything? So, I mean, if you have experience in that, we have a young lady that's a nurse practitioner, and she wants to get her own building. She wants to start her practice. And so the first thing they wanted to know, because we didn't know what her job was, but she says, I'm a nurse practitioner. She's been doing it for 10 years. She also has a little side thing with the nurse practitioner. She wanted to do the weight loss. I told her I'll sign up first. And so, she's been doing all of that. So we have a resume of all that she's been doing. And she had the 20%, actually 25% to put down. We're also doing daycares. There's a daycare that they want to buy one in, I think, Calumet City or Chicago Heights, whatever. But yeah, she's already had one. She's existing. The only thing is the one she had or the one she has that she wants to move from, she's renting. And so now she wants to buy it. And the particular thing with her, she wants to build it out as well. So the property, I think maybe 225, but we're going to give her like $75,000 to add a kitchen, to do a bathroom, and just add other things and make it nice for her. So it works.
Okay. So if I want to do the gas station, I need to find that person that doesn't look like me that knows what they're doing. Put them on my LLC. All right. I got you. I got you. I see. The reason why I'm saying is because we don't think like this all the time.
No, we don't.
You know, but a gas station is a money maker.
It is.
Until everybody start buying Teslas, and then we're gonna lose the money. I'm gonna be in line, the first line.
And
I told your cousin. For you all that don't know, she allowed me to marry her cousin. I told. I told her cousin, I said, the next car I want to get will be electric. I'm tired of paying this gas.
That's right. I know. That's right.
Now, is there, I know you mentioned 20%, but is there a typical down payment amount that I can expect that I would need to do in buying a home, or depending upon the program that I'm in?
It does depend on the program. Usually everyone knows about FHA. So that's 3.5%. Sometimes I'll ask for 5%. And you'll say, well, why? Why 5 and not 3.5?
Why are you asking me for 5%?
Well, sometimes it depends on their debt ratio. We have a lot of people come in, they have so much debt. And so, believe it or not, that 1.5% will help them get that loan without, going over a certain amount of debt ratio. So the debt ratio has to be, or should be, the front end, and the front end of the debt ratio really consists of, they'll take what you're paying out, so your rent, and they'll divide it monthly into your monthly income. And whatever that figure is, it has to be less than 40. And the back end ratio, or actually the lesser of 40, the better. The back end ratio, that's all the debt. They'll take all the monthly debt, including what the new payment for your mortgage will be, and they'll divide it in your monthly income. And that will be the back end. So the back end, they don't want to go over 50. Okay. Mm-hmm. If it goes over 50, then they'll have to do some other things. So I try to, let's put 5%, because the 5%, there's something that's called compensating factors. Compensating factors are good when you're right there on the edge. You're kind of, you're not sure if it's gonna go, but they'll have some compensating factors. Long term on the job, good savings pattern, 5% down, not the norm of 3.5%.
Okay. Now I'm gonna ask this question because I hear this all the time. There are two questions actually, but the first one is, uh, whenever I write a contract, there's earnest money. A lot of people confuse the two. Because they when we tell them a down payment, they think that the earnest money is their down payment. Earnest money can be as little as $1,000 and as much as three, five, whatever. So they think that when they pay their earnest money, that they are paying the down payment, and I have to tell them, no, you need to talk to your lender to know what the down payment is going to be. So, can you tell them the difference between earnest money and down payment?
Well, the earnest money is just simple. I've actually seen it as $500.
Yeah, yeah.
But it's just to say, hey, listen, I want to put this money here because I want to buy this house. So my money is to hold this house for 30, 45 days, 60 days. Um, it's not the down payment. However, it will be, when you get your closing disclosure, we used to call it HUD settlement statement. But when you get that, you'll see that the earnest money will be coming as a credit to you. Um, a lot of people come and they don't have money to put down or, for the closing cost. So I'll tell the realtor, hey, see if the seller is willing to help the buyer with the closing cost. Um, and sometimes they'll come up with the whole 6%. However, I want you to know closing costs have gone up. Everything has gone up. The title fees have gone up. Everything has gone up. So, sometimes that 6% is good. Sometimes you still have to come out with a couple of dollars, but it's not as much as you would have. All right. So that 3.5%, if you do that on the 200,000, what is that amount?
I don't know. I hated math.
So that's $7,000. So you put that $1,000, you still have to come up with $6,000. Now that does not necessarily mean that you got to come with all of that to the closing, because there are other factors that will give you credit as well, such as tax credits, because the way we pay taxes here in Illinois, we basically pay them in arrears.
Mm-hmm.
So we will give you a tax credit. Sometimes that's 3, 4, 5, 6, 7, $8,000 that they will credit you. So you only have to come, when we tell you it's 6,000, may only be 2,500.
Yeah, we had that with a deal that you and I did, where the young man, I think originally he was supposed to come with like a little over 20 grand, and he only had to come like about 17,
Yeah.
somewhere around there.
Mm-hmm.
He kept saying, "I got to come up with." I said, "Just hold on to the end."
Hold on.
And he came in, and he's one who received seller concessions.
Mm-hmm. He
We
did.
had to talk, and the seller gave this amount, the seller gave this amount, the seller gave this amount. And so I tell people, don't fret over what you hear from your lenders, what you have to pay, because the seller can help you pay that.
Yeah.
It depends on how bad they want to sell that house.
Mm-hmm. And
So,
make sure you get a good attorney.
yeah, and that's the other thing. Now I'm gonna bring it from the realtor side. I'm gonna help the people out.
Help the peoples.
If you don't have a real estate attorney, first of all, it's not mandatory. I've seen people close their own deals, but I strongly advise against it, because you don't know all the legal ramifications.
So true.
But if you don't have a real estate attorney, do not Google for real estate attorneys. Don't go online and Google with something that might be unreputable. All right.
So
First
true.
of all, ask your realtor. Say, hey, do you know of any real estate attorneys? Now, I don't just give one person. I don't give just one person for if they ask me for a lender or what have you, because, and it's sad to say that, let's say if you get burned by your attorney, burned by the lender, you're going to try to sue. You're going to try to sue me because I referred them. So what I do, I give you options. All right. I tell you who I work with, but then I also give you options. Call everybody and compare their prices, whatever.
Mm-hmm.
With a real estate attorney, if you cannot reach them by phone, If the only way you can reach them is by email, and they return your email 2 days later,
Don't do it.
if your deal closes and your real estate attorney does not even know that your deal is closing and they're not there to close your deal, but they want money, you have been scammed. Okay, I'm just gonna put it out there like that. We had a deal like that, and
We did.
They found the attorney online, and no one from the seller's attorney, the lender, the title, no one ever talked to this attorney. We couldn't reach the attorney. We're like Vashawn Mitchell. We looked high and low, couldn't find nobody. All right? Couldn't find nobody. We would get an email every now and then. And then he was surprised that we had the closing.
Yeah.
And then he had the audacity to tell my client not to sign this one piece of paper to solidify everything. I said, he hasn't been here. I say, you paid him X amount of dollars and he hasn't done anything for you, but now he want to give you some advice, so you're going to lose this house?
Yeah.
I said, man, you better sign this form. Listen.
Even the seller attorney, she knew of him. And she says, I don't know why people use him.
Oh, I didn't know she knew of him.
Yeah.
So I said, if I ever see this name again come across my email or my computer, I'm going to tell them to get rid of it. I'm not doing the deal if you're going to use this person as an attorney.
For sure.
Never again. So you want to do fact checks. You want to check everybody that you're working with, everybody that you're paying money to. You want to make sure they're on the up and up.
You do.
If you can't get a phone call to your attorney or from your attorney, no. So don't Google. And don't get me wrong. There are some people who they advertise online, so there's some reputable ones, but you don't know what you're going to get. I would say go to the Better Business Bureau, check to see what their ratings are, because otherwise you'd be throwing money away. And then the amount of money he paid this attorney, had he gone with the one that I would have recommended or at least referred him to, he would have paid $300 or $400 less. All right. So make sure you have a good attorney. And then let me also, since I'm in that vein, when you get a house, when you're purchasing a house, there's usually a period for a home inspector. You want to have your house inspected.
That's right.
If you live in a suburb, the village is going to inspect it, but they want to just make sure that it's livable. But your home inspector that you hire will make sure that the plumbing works, the roof is good, the heating works. And again, a home inspection is not mandatory, but I strongly suggest it. And
they'll also give you the life expectancy.
Yes.
Of, because HVAC systems, they're expensive.
Yeah, they'll tell you if the furnace is new or if it needs to be replaced. And then you can use that as leverage in negotiating with the sellers. Maybe they say, this, that, and the other. And the sellers say, you know what? We will credit you money for repairs. We'll leave it in escrow, however you want to do it. And you won't have to pay for the repairs out of your pocket. Okay, years ago, Kim and I had a deal where after the deal closed, the Crete deal. Okay, that's all I'm going to say, because we have people on here who know it. After the deal closed, I told them to do a home inspection. They didn't want to do it because they wanted to save money. 2 days after the deal closed, I get a phone call.
Yeah.
Kevin, every time we run the shower, the light fixture in the kitchen fills up with water. We want to know, what can we do? I said, there's nothing you can do. I said, I told you to have the place inspected. They would have checked for all of that, leaks and everything, problem with the plumbing. But there's nothing you can do now. All right? So, and you have about 5 days. Once that contract is signed, you got about 5 days. You work with your attorney. They can negotiate any kind of concessions or anything. All right. So just some tips. And this will come out further in a home buying seminar. So those of you that's interested in buying a house, I want you to make sure that you register for a home buying seminar that we will be putting information out very soon. God bless Mother Pat Clark, Sister Denise Young, Sister Missionary Lisa Ivies, Tammy Roden. God bless you, Sister Robin Festerson. God bless you, Carolyn Washington, Diane Barner. God bless you, Pastor Barner. All right. So when you answer my question about bringing it to closing, because some people be like, even when I was buying properties, I'm like, how much you got to have at closing? I'm like, what? I was like, Kim, because Kim was she was my lender. I got to bring what to closing? All right. So, all right. How does the interest rate affect my mortgage, and how do I know if I should buy now or wait? The reason why I ask it because now everybody's getting their income tax return.
Mm-hmm.
They're trying to call, somebody that they're going out seeing places, and so they saying now, okay, the interest rate is this. What is the interest rate, and how does it affect my mortgage? And then, well, should I wait for it to come down? How do I know it's going to come down and not go up? So how does that work?
That's a good question. And yes, I'm faced with that also. Um, I suggest, this is my saying, marry the house and date the rate.
Okay.
Everything is going to go up. Everything is going to go up. So the house that you see right now, that's 275,000. When the rates go back down to where we were, it probably won't be for another 3 years. But the house that you're looking at now, that's 250, 275,000. I promise you, it's going to be 300,000 easy, if not more. So go ahead, marry the house, date the rate.
Okay.
I had a cousin. She lives in New Jersey, but she was buying a house in Florida. And, she was like, Kim, all the rates. I was like, girl, do you want to move? She said, yeah. I said, well, just buy the house and date the rate. In her aspect, she asked me if doing an arm loan, an adjustable rate, if that would be sufficient. And we discussed what the rate was, and I think it might have been at 5% for 7 years. Yeah, let's do an arm. Do an adjustable. It's not going to go. It's going to be fixed for that 7 years. And once the 7 years is out, there's no prepayment penalty. Okay. So if in 4 years the rates are lower than that 5%, refinance out of it. It's okay. Listen, right now, just buy the house because it's not going to get any cheaper, people. It's not going to get any lower. So marry the house and date the rate.
And I agree with you because the housing market, especially since it's a seller's market,
Mm-hmm.
it's not a buyer's market right now. So the average home out there, might have about 10 to 15 to 20 offers on it. So you're trying to come in a low ball, you're trying to, an offer or whatever, and try to get all these different concessions.
Mm-hmm.
And when they tell you that it's as is, they mean as is, because they have about 15 other offers that if you give them a lot of static, they'll just move on to the next offer. But if that house is 250,000, I'm gonna tell you this. I'm just being honest. As a heart attack, I don't know if a heart attack is honest, but yeah, I'm just being honest. A $250,000 house is what a $150,000 house was like 2 years ago.
So true.
Because you get a $250,000 house, it's gonna need some repairs. It's gonna need some fixing up, or either it's not big enough.
That's right.
It's gonna be like your ranch home that's small with 2 bedrooms. A 2-bedroom ranch home is gonna cost you $250,000. The average pre-approvals that my clients have been bringing me are $300,000 and up. And and that's getting you what a $200,000 house used to get you 4 years ago.
Now, I will say we do offer the 203K. They're paying, but but listen, and what the 203K is, it's the house that's 200,000, but with some work, and the work may be new floors, new this. We'll give you that money. We'll give you that money in order to fix it up. However, there's a few things. You have to have a licensed general contractor. Has to be licensed, and he'll get money once things are fixed. Right? But we have them. We're doing them.
So, those of you that want to get that house that's 200 grand and figure, hey, let me get a 203K loan, a rehab loan, and fix it up, and then you can have it fixed up to your specification. But everybody's not able to do that. But my thing, I'm like, Kim, get the house. If you see a house that's wonderful, that's fancy, it fits your needs, and you've been looking and you haven't seen a house like this, and you're worried about the interest rate, get the house.
Yeah.
get the house, you can always refinance
Hmm.
for later on. And since you mentioned ARM, that's my next question. What is an adjustable rate mortgage? We call it an ARM, and what are the pros and cons of having one, and how does it compare with a fixed mortgage?
Well, so again, this is an adjustable rate mortgage. That's what the ARM is. Um, and it just depends on the situation. As I spoke about my cousin, she wanted to buy this home, but she didn't like the way the rates were. So it just so happened that the adjustable rate was 5%. But again, it's going to, in other words, that 7 years, after the 7 years that she's been in that fixed rate, it's going to start adjusting. It's going to start adjusting, pardon me. Um, and you don't know where it's going to go. You just don't know. There will be a cap, and the cap is usually like 5% higher than that. But you don't necessarily have to stay in that. Now, what happens, and this is what happened, kind of why the industry kind of fell out. People were getting arms. Their credit, though, wasn't staying where it was in order to get that house initially. So they could not refinance to get a better rate. So if you're going to make sure you keep your score up, you keep your rates up, you
Hmm.
keep it up. Because if you want to refinance out of it, you can
Hmm.
and get a fixed rate.
Cause see, I know if I'm on an ARM, my goal is to be on here long enough to adjust it. Because, like you said, you can't predict which way it's going to go. It could go higher than what you're paying now. It could go lower. If it goes lower, we're all good. But
Right.
if it goes higher and you're still in that, you didn't refinance, you're stuck. Now, is the ARM is the one that when you get towards the end, you can have a balloon payment. See,
You could do a balloon
see,
payment, or again, the rates will just start. They'll just start going. They'll just start going up.
and how many people lost homes because of a balloon payment?
Hmm.
So adjustable rate is good temporary purposes, but I wouldn't stay there. I wouldn't try to be on
Mm-mm.
one for the duration of the
Mm-mm.
mortgage period.
No.
Now a fixed rate is to me is that the best one to be on, right?
Fixed rate is fixed.
30-year fixed rate. All right. You ain't got what's gonna come out. That's gonna come out for 30 years. All right. So but now adjustable rates, that does that help people with bad credits? Is that's
No.
no? Okay.
Mm-mm. No. I mean,
Well,
it
low credit. I don't want to say bad credit.
it won't necessarily. No. It really only helps if you're trying to buy and your debt ratio. In other words, you owe more debt than what the company allows. Then you could kind of get on adjustable because that rate is lower than the fix. But I don't, I don't sell that at all.
Okay. So now I get a mortgage with you guys. Well, I'm in the process of one.
Mhm.
How is my monthly mortgage payment calculated and what goes into it? Because I know sometimes some people have their insurance wrapped up in it, their taxes wrapped up in it.
Hmm.
So how is it, the typical mortgage payment? How is that calculated?
The typical mortgage payment is calculated based on the amount of loan that you're receiving. All right. It also factors in the interest rate and the term. So the term can be 10 years, which is 120 months, 30 years, which is on 360, 15 years, which is 180. So it's factored in that. Once you get that figure, and then I noticed that Google has a lot. You can go to Google for everything. I didn't realize that, but
Hmm.
Google has a plateau that you can
Except for real estate attorneys. Don't go to Google for that. Okay, go ahead.
that you can put that information in, and then they'll give you an approximate of what the payment will be. Now, if you're buying a condo, it won't have your homeowners association in it. You have to pay that aside. Any homeowners association, it won't have that. The lenders will not collect for that. But we do add that to your debt ratio. And so sometimes, you know, depending on where you're buying with these condos, the homeowners association fee is 3, 4, 5. I know of one that's 1,500. They're downtown, but It's $1,500 a month. So that is always a factor in your debt ratio.
All right. So now, um, when we are looking at purchasing a home,
Mhm.
we almost need a checklist. Um, I'm going to go back to the credit score. When somebody come in, let's say somebody came in with, you said 580 at least, they
Mm.
came in 575, 75.
Mm.
Uh, would you advise them to pay some things off first before trying to, get a mortgage?
Good question. Um, so we just had one. Um,
Yeah. But see, in that regards, he got bad. Again, don't Google your lender either, because he got bad advice from the lender that ghosted him after it fell flat. And they did the underwriting themselves. Okay, go ahead.
so true. Um, Sometimes, so let me tell you what we do. When I do a pre-qualification, we have a credit system that we will pull a soft pull. All right. And what is that? A soft pull will not show that it won't show an inquiry. All right. Sometimes if you do inquiries, they will pull your score down. So we'll do a soft pull just to kind of see where you are. If we have someone that's a 579, 580, my best suggestion to them is listen, I want to work with you. Let's take care of this. Let's do this. In some situations, all you need to do is just pay down some of the credit cards. If you have your credit card, if you got a credit card that the limit is $500, don't keep it at 450. Your score will never ever go up. Take it down to half of that, if not less than. Your credit score start jumping. Do that. Do that for, 6 months. But and then let's come back and let's, renegotiate and look at it and see what we can do. We're also looking again at the bank statements, your job time. Some of you people, I didn't mean to say it like that, but you have 401ks. Listen, they will give you that money. It's called a hardship. They'll give you that money. I just closed the loan, and he's like, I got some money in a 401k. Well, how much do you have? He didn't have a clue how much. When he realized he had $7,000 or $8,000, he's like, no, I want it all. But we just closed the loan. But he was one of my best customers because he came back. He's like, Kim, thank you, because had you not taken the time to just go through everything, and he called me every day, but if I had not taken the time to help him, he wouldn't know what to do. So I don't mind helping anybody. Listen, it's gonna be a fight. We're gonna get in the ring together and we're gonna do it. But if you don't do what I say, we can't do it. But if you do what I say and suggest and just adhere to some of the suggestions that I have, we'll work it out.
Now, I have heard this from some lenders. I don't know how true it is. Maybe you can, give me your opinion on it. That if you have some creditors on your account, on your credit report that have been paid off, and paid off for like a year or two,
Hmm.
and they're still showing on there, that you can call and ask them to remove themselves from your credit report. That will, it's like it will help you, because if they don't see it, then it might help your credit. How true is that?
I don't know how true that is. Um, I do suggest that you not pay. No, you pay it off. But if they have it on your um, credit that you owe them $10, but fine, leave it on there, because oftentimes when we pay it off and have it removed, that'll lower the score also.
Okay.
Yeah.
All right.
So just keep it on there. Keep paying it. I have a gentleman that his score is 800. And he's a young guy, and so I was wondering, how did you get that 800 credit score? He says that he doesn't give it time. He just pays it. So if he used the card, he's gonna pay it not the next month, but the same month. So on his credit, and this is the downside to that. On his credit, it doesn't show. It shows that he has had the credit for a year or two, but it doesn't show that he has made payments on that credit for a whole year. Does that make sense?
Because he
So
paid it straight out.
he's paid it straight out.
Okay, so and see that's the question they get a lot of people, because I was one of those in college. That was me. As soon as I got the bill, I just paid the whole thing off. Why, if I got the money to pay it off, why would I, keep making payments on it? Why, and that's what young people ask. They say, okay, I'm paying the bills, but I can't get a car. I can't get a house because you're saying I'm not showing a credit history. I got the credit cards. I make the payments here, all the payments that I made. I paid everything off.
Right.
So why do I need to? Why does it sound better that I make monthly payments and spread this thing? If I make monthly payments, I got to pay interest fees and all that stuff. So why is it?
On that credit, you're going to see the history of the payments that you've made on that. And then it's going to show 30, 60, and 90. And so it'll show under that the number of lates, if any. Sometimes it'll show 0. But they don't see a payment history, so they don't know how you pay. Although they see you got that 800 credit score. And in some cases, that'll work. They're like, well, you're doing something right. But in a lot of cases, they're like, well, yeah, you got the 800 credit score, but there's no payment history.
So there's no mechanism in place when I come and say, well, I paid it off. As soon as the bill come, if it's 50, I pay the whole 50. Why would I pay 25? Why would I pay 10 when I can pay the whole 50? I mean, because to me, it seemed like that, and I've always said this, even when I worked for a lender, I'm like, it seemed like it's not fair to those who just believe in paying their bills. They're paying their bills, but then they get penalized for paying their bills to the point where they can't purchase property because you want a credit history. The credit history is I owe nothing on it. That's the credit. I paid it off.
That's the credit history, but that's not the payment history.
Yeah, that's always been something. I hate it. I understand the reason why. I really do, but I also understand the person who don't believe in making. They pay it off because they have that availability to pay it off, but then they can't get a car loan or they can't get a mortgage. My oldest son Justin, when he first started looking for a car, he had a credit card, and things paid up, and they're saying, well, we don't show a credit history. He said, but I don't owe nobody. We said, I pay.
And that's a good thing.
And he said, I pay, I pay everybody, what little I have, I pay it. Well, it's not, we need to see you making payments. And he can understand, why do I have to make payments if I'm able to pay it off?
Yeah. And so there's, when you say that, I think about the credit card, Amex. That's one that you have. But when you look at it on the credit report, it shows balance and it shows even a payment, even though we don't figure that payment out or we don't take that payment. But it does show a payment and it shows a payment history. So I don't know. That's just one of those glitches in the system.
Yeah. I got to, because if I owe $50 and you're going to give me a monthly payment of $10, plus you're going to charge interest on that, I'm paying more than what I owe. See? So, I understand.
Well, and of course, that's someone that's trying to establish credit.
Right.
But those that have a car loan, go ahead and do what you got to do. But, that's establishing credit.
Yeah. And then that's the whole, for the other questions that I have to go through a home buying seminar, because as people asking about prepayment penalty, if I paid off my mortgage and now y'all want to penalize me for paying it early. See, so it's a whole lot there, but we're running out of time. But we thank God for you being here, and this is going to be a continual thing. So you want to buy a house, because I get these questions all throughout the course of the year. But we just thank God, and we pray that something that we said today will help you all.
Definitely.
And so we just thank God. But God bless. Thank you for tuning into Connection. Listen, again, if you want to be a Connection sponsor, we have packages that are crazy affordable. feel free to stop by the Victory Temple Church of God in Christ every Sunday from 8 a.m. to 9:30 a.m. We're located in the Community Presbyterian Church building at 2000 West Roosevelt Road in Broadview, Illinois. Listen, it's on the corner of 20th and Roosevelt. If you Google it, if you try to ask Siri, she will have you in the Forest Preserve. The 20th Avenue and Roosevelt Road is where you will find us. Tomorrow's message is this: servanthood versus entitlement. Amen. So we'll be here next Saturday, not next Sunday. Next Sunday, I'll be down the street. We'll be here next Saturday, 12 noon, here on Connection. God bless you. I'm out.